So welcome to my class, and in this we are continuing on with unit 5. That is the last unit that we have to do in macroeconomics, that is balance of payments. Now I'm sure all of you've seen a statement of the bank. You have your passbooks, that's a statement given. That means where the income comes in and where it goes. So it's something like that. It's a statement for a country to know what are its economic relations with the rest of the world. So regarding its trade relations, visible as well as invisible. So those economic transactions are recorded here, and they are shown as credit and debit. For the children who are doing, or the people who know accountancy, it's double accounting which goes on here. And otherwise, just remember, it's just like a statement of the bank. It tells you where your money comes from and where it's going on. So just have a quick look, and let me just tell you what is balance of payment. What is the meaning? So balance of payment is an accounting statement that provides a systematic record of all the economic transactions between the residents of a country and the rest of the world in a given financial year. And balance of payment accounts are related to a certain, the financial year. So they are at a period of time. So once again, it is a systematic record of all economic transactions between its residents and residents of foreign countries during a given period of time. So talking about the features of balance of payment, I'm sure you can talk about them. One is, it's a systematic record. It refers to the record of all economic transactions of one country with another. So second is, what are the components? Like, for example, economic transactions shown in balance of payments are classified into current account and capital account. What does current account include? All type of visible and invisible items, while capital account includes all capital transactions. So capital transactions are something to do with loans and investments. And current is all about selling and buying or trading with goods and services, or the unilateral transfers. And balance of payment is a flow concept, as economic transactions of a country always refer to a certain period of time, usually a year. So now, what is the significance of this balance of payment if you're talking about? So it's very useful to every country, as these accounts highlight the state of the economy of a country. These accounts indicate about the economic relations of the country with the rest of the world, basically. Now, just a little word on, I've shown you that it's like a typical business account. The balance of payment account has two sides, the credit side and the debit side. All inflows, that is sources of foreign exchange, are recorded on the credit side, and all the outflows, that is uses, on the debit side. So you can see that I've made that. And we just mentioned that each of the balance of payment of a country is subdivided into two sub-accounts, that is the current account and the capital account. So the current account records the flow of foreign exchange arising from foreign trade, incomes and transfers, and the capital account part records flows from changes in foreign assets and liabilities.